What is Islamic banking? Islamic banking refers to Sharia compliance banking that obey the Islamic resources. The first Islamic banking was established in 1963 in Egypt, named Midterm Savings Bank. The importance of Islamic banking is to give fair benefits to all humans because it prohibits the maisir, gharar, and riba. Did you know that global percentage of Islamic financing is 6% in Islamic banking assets? Most of the authors argue about the ethical component that should be practicing truthfully in Islamic bank. In addition, they compare the Islamic banking theories with the Islamic bank currently practiced. They also compare the Islamic bank and conventional bank. For example, conventional bank gain profit from the interest, while Islamic banks don't. Besides, some of the authors discuss about the importance of standardization, innovation, and regulatory system to fulfill the Maqasid Sharia. Thus, all the authors urge the Islamic banks to make sure that there is no prohibition element in their financing products.
In this part, we are going to explore about the author's aim regarding Islamic banking in their articles, highlighting its unique characteristic based on Islamic teaching. Let's get started. To begin with, the main goal of the article in the Arab Bank Review is to provide knowledge about the philosophy and development of the Islamic banking, connecting its roots to Islamic law and Islamic revival. In the Islamic banking in the crossroad, it aims to explain the difficulties that Islamic banking might faces, especially when it comes to maintaining a balanced position between theoretical ideas and the real application. Moving on to the next author, which is Mabit Ali Ajarhi. In his article, he evaluates the advantages of Islamic finance and also identifying some areas where traditional systems can be strengthened. Besides that, according to Siddiqui, the goals of Islamic economic studies include a thorough examination of situation of Islamic banking at its stands today, the identification of relevant problems, and suggestion for more research and development in the field of Islamic finance. In addition, through research published in the Journal of Insurance and Financial Management 2023, Sheda Iman Kardazi digs into the past and present conditions of Islamic finance in Pakistan and around the world. In addition, the article presents the viewpoint of Islamic banking practices and the need for ethical concern, looking into the complex issues caused by the market structure, external forces, and regulatory limitations. And last but not least for this part, the importance of professional standards in maintaining the integrity of Islamic banking and finance is highlighted by Kayode and Ishola. Let's move on to the approach of the authors. To begin with, by investigating open fiqh matters, Muhammad N. Siddiqui brings his attention to differences between theory, models, and implementation. Meanwhile, the article in Arab Review covers Islamic banking in broad terms, discussing country experiences, theoretical development, normative judgment, and observational research. Moving on to the next article, economic theory is explained in the Economic Theory of Islamic Finance with a focus on contribution to the theories of monies, price, banking, finance, and macroeconomics. On the other hand, a thorough examination of both theoretical and practical factors is provided in Islamic banking at the crossroad theory versus practices. However, among the others, Shida Iman Ghazi is the only one who questions the Islamic finance commitment to Sharia and ethics in her studies. In addition, the book Islamic Banking Theories, Practices and Insights for Nigeria provides information on money development and the features of Islamic banks. Last but not least, the article Islamic Banking Practices and the Need for Ethical Concerns evaluates the state of the field and discusses challenges to upholding professional ethics in the industry.
The analysis from 10 articles shows that some similarity and differences according to 10 authors. So what is the similarity of 10 articles? First, emphasize the product of Islamic banking such as mudarabah, musyarakah, murabaha, and istina, which prohibit gharar, riba, and masir. Second is the evaluation of Islamic finance that start at Mesir and mostly practiced by Muslim countries such as Jordan, Pakistan, and Saudi Arabia. So what is the difference of 10 articles? First, the insufficient number of legit Islamic finance advisors that need to overcome the lack of standardization in Islamic finance. Second is there is no certification method to use for calculating profit and loss sharing mudarabah. Third, some banks is not transparent enough regarding to interest charge, management charge, and delay in payment charge.
Now, we will get into the findings of Islamic banking theories and practices. Islamic banking emphasizes profit sharing and risk sharing, contrasting with conventional banking's fixed interest model. Sharia-compliant products like mudarabah, musyarakah, murabahah, ijarah, and sukuk are the key. It's growing in the Middle East, Southeast Asia, and also Africa, offering economic stability, moral investment, and social justice. The challenges include Sharia compliance complexity, lack of standardization, and limited market penetration. Despite hurdles, Islamic banking shows dynamic growth, poised to contribute significantly to global economy.
There are some limitations that we have found when reading this article a bit. According to the findings, if regulators and Islamic banks can manage effective and efficient executive, it will have a positive impact on the performance, image, goodwill, and quality compliance of Islamic banks. This is because effective and efficient executive can manage the bank's resources effectively while also ensuring compliance with regulation. Islamic banking also has limitations that directly influence customer behavior. This new conceptual framework helps managers understand their customers better and has implications for emerging themes such as developing strategies for specific customers group and their internalization process. So one of the studies, consumer behavior and religious satisfaction strongly connect with the level of religiosity displayed by consumer on their property. So Islamic banks must create in the minds of prospective homeowners that the impression that selecting Islamic home financing products is a religious duty. They must also explain why selecting Islamic home financing product is one of their choices that aligns with Islamic financial transaction or muamalat. To meet Islamic requirements, banks might improve their image with consumers by enhancing their advisory services, commercials, and persuasive product brochures. Through strategic planning, Islamic banks can promote a perception among prospective homeowners that they support Islamic home financing.
In conclusion, we could apply scholars' topic research to make product innovation that cater the customer needs. We should also practice continuous research and learning to stay updated on the customer demand and solution for the new Islamic banking.
On the other hand, Islamic banking can be enhanced by promoting Sharia governance since it will ensure that moral and ethical guidelines are followed. To help employees make better decisions, Islamic banking organization, for instance, should make sure that all employees are received training and exposure to the Sharia principle. Next, information should be published and Islamic banking should be transparent. This implies that specific institutions should notify clients and investors about Sharia compliance regulations and procedures in order to guarantee that they are aware of the transaction they are doing in Islamic banking institution.
In my opinion, the best way to amplify Islamic practice in banking by collaborating with Islamic institutions. For instance, expose IIUM students with the theories and practices of Islamic banking in every subject learned by the student in university. This will help producing a new generation of bankers or accountants that attend a mindset aligned with the Islamic regulations.
Lastly, community engagement also has the potential to enhance Islamic practices in banking industry by forming partnership with Islamic institution and NGO. They can promote financial literacy and raise awareness regarding Sharia-compliant financial solutions. An example of this would be collaborating with local mosque and Islamic NGO to conduct workshops and seminars on understanding and implementing Sharia-compliant financial practices. The objective is to empower the community with knowledge, enabling them to make informed financial decisions aligned with their religious belief. That's all from us. Thank you.
We also believe that promoting financial inclusion in the markets will also help enhance the article on Islamic finance. For example, make Islamic banking products and services accessible to undeserved communities, particularly the poor and unbanked.